Working with joint venture partners. Is it a good idea? And if it is, what tax structure should you use? That's a good answer. Let's talk about another question, which is again, this is from Lewis. Talk about, again, I think it should be probably balancing on limited companies. Lewis is asking, I'm looking to partner with two separate sole traders. It doesn't matter if they're sole traders or not, to be honest. I think there are two individuals that you would be working with as a joint venture partnership. I've lost count of how many people, unfortunately, have fallen out, whether that's close friends, family, more family than friends. I've got to be honest. It's really sad, and it's painful.
Business sometimes brings out the best in us, and sometimes the worst.
Yeah, and I think people have got to be. Look, guys, I've got to be honest. If you value your friendship and value your family, don't go into business with them necessarily.
So it's the husband and wife team.
Yeah. But there is, I think there's a level of understanding that you and I have, and it works. But there's so many people it doesn't work with.
Absolutely.
So please do be careful. Please do take your time. And I mean this sincerely. Just talk more regularly. Don't jump into the first deal and then want to do a joint venture partnership. Take your time. Okay, I can't stress that anymore, because you could lose your friendship, you could lose your family members, and it won't be just the immediate friends and family. It could be wider network as well.
Ramifications, absolutely.
So, with that all said, let's talk about structure, because there could be a sole trader, which we've already talked about. We've talked about risk. We talked about income tax issues by being a sole trader. There's LLPs.
Limited liability partnerships.
Yeah, what type of LLPs? Let's just quickly talk about that. What is an LLP?
So an LLP, limited liability partnership. There are three types of partnership available in law here in the UK, and I would say the LLP is perhaps the most belt and braces and all-encompassing type of partnership structure. It means that there is a little bit like a limited company, limited liability, so long as, again, you're not giving personal guarantees left, right and centre. But it means that if something were sadly to go wrong in that business, then the partners in that business have a limited liability towards resolving that problem. I hope a problem never occurs, but that liability limitation really seems to give people comfort that they're actually doing something protected. The important thing about any partnership is actually, if you are a flesh and blood human being as one of the partners in that business, any profit that is shared with you out of that partnership venture is actually taxed in your personal name. In other words, it's caught under income tax, not something like corporation tax. So for some, they don't see the benefit of a partnership because it's not saving you any tax. But the benefit doesn't lie in the tax treatment. The benefit lies back, as I said, into that liability structuring that protects all the members of that partnership carefully.
And I think once you take that into account, you then realise what an LLP is for. So solicitors and accountants typically use LLPs because they can manipulate the income profits share each year, to be honest. So LLPs have got a greater flexibility. Coming on to the legal structure. Obviously, you mentioned LLPs, about limited. Sorry, there's someone above us who just moves around.
It's not Santa.
It's not Santa. He's not coming in, but he does like to drag furniture. So the thing about that is you could have this legal company structure in place, but the first thing I would say, that is just the entity. That is almost like a framework. Again, back to my point earlier, get a legal counsel involved, and that sounds quite intense, but it is essential. So make sure you work with a commercial solicitor to draw up a legal agreement between all the partners to say who is going to do what and when. Part of that agreement needs to be things like, if you fall out, what happens to the business? How does each member buy each other out, whether that's a member in an LLP or a director and shareholder in a company? You've also got what happens in death. So if you die, your wife dies or a spouse dies, then who takes over those shares and investments, and what can they buy it for? Because in some structures you might say, well, actually, if you die, I want to buy it back. I don't want your wife or your husband part of this business. So you need to think about that as well. who is going to do what and when? What responsibilities do you all have? And I think these documentations, I think, I've got to be honest with you, a lot of people, they get all excited about all the fun stuff and buying properties and stuff like that. And then when they fall out, they go, right, what does your legal documentation say? And that would be my first question. And they say, well, we didn't really draw one up.
We had an agreement. We had an understanding.
Yeah, got an understanding. Yeah, got an understanding. And you've got to have an agreement at that point in time. But then you fall out, and then there's no agreement.
Or there's no common memory of what was agreed. That's the other one that we see a lot. So I thought we meant this. Well, I definitely didn't mean that. I meant this.
Yeah, exactly. So I do think you need to do that. But then there's the limited company. Who's the shareholders? Again, using ABC share structures. So this is quite complex. So I would say that if you're working with joint venture partners, again, honestly, just talk to them a lot more. Don't just jump ahead and go with a first deal and say, yes, let's do this. It's all exciting. Actually, you probably need to meet with each other when it's raining. Because
when it's dark and dreary.
When it's dark and dreary, because you're not excitable. I think people get carried away in life a little bit and then say, yeah, it's all honeymoon period. And then tomorrow comes and it's not. So do that. Take your time with this. Work with a work with a commercial lawyer to draw up that agreement and spend time on it. If you get through that stage, which is painful, then it's to be. I think there is something there.
The reason I love working with a commercial solicitor, so go and find your local quality, reputable solicitor firm and ask to speak to a representative of their commercial department. And the reason I like working with such solicitors is it's a little bit, if you've ever worked with a solicitor to build a will, they ask really great questions to probe the underlying requirements that you have. So, sadly, when you pass, who are you going to send on your goods to, your chattels to, your life's work to? What happens if they've already gone? So who will you then pass it on to? But what happens if they've already gone? Who will you pass it on to? And it's that kind of probing quality question and question set that you'll also get out of a commercial solicitor. So they'll probably come up with more scenarios than you realised were out there, but they'll come up with pragmatic, realistic scenarios and help you think through more that are specific to your circumstances as well. So it isn't going to be a couple of quid. I know that. But my goodness, it could save you thousands, if not tens of thousands later in the process when you discover a disagreement and no one has a common understanding of how to deal with it.
And last, before we finish on this one point, is what happens when you make a loss? Because if you put £100,000 in to get the business started and you're making losses and then your creditors are asking for money, who puts more money in? Because you're not always anticipating making those losses. But a lot of businesses, 85% of businesses fail or struggle. And therefore, you do need to think about, well, if we struggle, who is going to back this up? Where do we get the money to do that? And which of the members is going to do that? So you do need to think about a lot of things when you're doing joint ventures. But good luck, Lewis. I hope it's not put a dampener on things, but I do want to stem the enthusiasm before a massive mistake comes along. Because trust us, we've seen it time and time again, where clients have gone through this process, brothers, sisters, falling out. I don't think it's worth it, in all honesty.